Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, New York real estate developers are nervous about mayoral candidate Mamdani's agenda, but RXR CEO Scott Rechler is one developer still not convinced that he'll win.
New Yorkers who come here for opportunity, that this is the capital of capitalism, I think, they're going to come out and say, I don't want a socialist for mayor.
Apple weighing AI partners for Siri. Steve Kovach explains the future of tech assistants and tech giants.
This is the stickier ecosystem.
That's what I would say right now. If you ask me that right now.
Right. You're going to ask Siri more than you're going to go in and open the ChatGPT app.
Plus, the push to expand trading beyond the public markets and open private companies like SpaceX up to retail investors. Co-CEO of Republic, Andrew Durgee, is doing just that, and he's using the blockchain.
We are giving people an opportunity to participate in a very limited capacity in something that they've been kept out of previously.
But there could be a legal reason why pre-IPO access for unaccredited investors isn't more common.
What you're doing is effectively at odds with what the law is intended to do.
It's Tuesday, July 1st, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today.
The Senate working all night on President Trump's tax and spending bill, voting on dozens of amendments as GOP lawmakers race the clock to try to get things done by Independence Day at the end of this week. Emily Wilkins is with us. Have you been up all night?
Andrew, I did get a couple hours of sleep, but I have been up for a few hours now just reviewing everything, because we actually did kind of expect that there could have been that final vote by now. Instead, we got the Voterama entering its 21st hour as Senate Majority Leader John Thune and GOP leaders, they're continuing to negotiate with a handful of holdouts, trying to make sure that they're able to actually pass this. Now, concerns remain both from fiscal hawks like Ron Johnson, who are very worried about the cost of the almost $3.3 trillion bill, as well as from senators who want to protect Medicaid. Your Susan Collins, your Lisa Murkowski's. Murkowski was actually just in Thune's office chatting with him. Now, so far, there's been one major change to the bill. That AI moratorium on states, that is out now. The end of the ban came after Senator Marsha Blackburn. If you remember yesterday, she struck an agreement to soften the limit, but last night she changed course, announcing she could not go forward with that new language that has been stripped from the bill at this point. Now, we are still waiting to see if several other amendments get offered. They could also change the outlook on the bill. One from Senator Rick Scott would shift some federal Medicaid costs to states, and then another from Senator Joni Ernst would allow more wind and solar projects to potentially qualify for some of these tax credits. Also, an amendment from Mike Lee that was a bit related. It would have completely stripped wind and solar tax credits. It was actually voted down by Democrats and a majority of GOP lawmakers. So maybe some interesting writing on the wall there. Of course, further complicating all of this is Elon Musk. He has continued to rail against the bill. He tweeted yesterday that every member of Congress who campaigned on reducing government spending and then immediately voted for what he's calling the biggest debt increase in history should hang their head in shame. He then went on to say they will lose their primary next year if it is the last thing I do on this earth. And look, apparently Elon Musk has been up all night, according to his ex. He says he's starting to make good on his word that he donated or will donate to Thomas Massey's campaign in the House. Of course, someone who's been a big holdout on this bill. And that's even a reminder that if the Senate is able to pass this bill today, they still need to get this over in the House, where we know there are more concerns over there. So guys, a lot to do between now and July 4th. And I think some serious doubts creeping in whether or not they're going to be able to get this done in that timeline.
So we have two issues. We have the timeline issue, and then there's a secondary question which relates to the timeline issue. With an Elon Musk out there saying effectively that he's going to help try to primary people, does that actually change the dynamic at all?
You know, I think perhaps for some of the fiscal hawks in the House, particularly House members, that you know, something like this can really make or break it. You have to be cognizant of that if they find a primary challenger to back, if there's someone that Musk is really willing to put a lot of money forward on. I think it depends how much Musk actually wants to get involved, because of course, as we've seen previously, when it comes between Musk and Trump, members have tended to stick with Trump, which is also another question: how much does Trump ratchet up the pressure on lawmakers to get this done? Does he come to the Capitol? So I think a lot of dynamics that still could play out within the next 48 to 72 hours.
But that's kind of the case. Some of these are caught in a damned if you do, damned if you don't. If you vote for this, Elon Musk is threatening to primary you. If you don't, the president is threatening to primary you.
Yeah, Becky, it's kind of a tough situation right now, and I think one that some Republicans, I'm thinking of Mike Johnson, were really hoping to avoid on this particular bill. I think, to be honest, a lot of lawmakers, they do want to get this done. That's what I've heard from folks, including for some of the holdouts on this one. But the fact of the matter is that if you're really passionate about a particular issue, be it making sure that Medicaid is in place or really lowering the debt, this, if you're a Republican, is really your one big last chance for years potentially to be able to make this kind of a change. And with margins this narrow, again, it really does not take that many lawmakers to dig in their heels and to actually delay things. And again, I've heard from a number of folks on Capitol Hill who would be perfectly fine with bringing this past the July 4th deadline, debating this and negotiating throughout the month of July, and then trying to get something done before they go into recess. Remember, this July 4th deadline, it's been touted a lot, it's been talked about a lot, but at the end of the day, the real deadline is when we hit that X date on the debt limit, and that's likely not coming until August or September.
Emily, just to belabor the point, maybe, when I'd asked about the Musk piece, not so much will he be able to primary them, is what he's saying publicly today going to have any effect on them?
It's a good question, Andrew. And I think at this point, the people who we know are the holdouts, we kind of knew were going to be raising some concerns about this before. So there's not anyone who I've seen so far who has actually been swayed by Musk into voting no when they might have voted yes. However, knowing that they might have the backing and support of Musk might lead for some of these lawmakers to dig in a little bit more. I think this is particularly a dynamic that I'm watching for more in the House rather than the Senate. There's just a different dynamic there when it comes to reelection campaigns. And so for Musk, it might have more of an impact on House members, but I also think a lot of House members are just waiting to see what the Senate does. Obviously, if that Rick Scott amendment on Medicaid gets through, that's going to change a lot of the math around this bill, but it could also change a lot of the math around the votes. And I think members in the House know this. And so there are a lot of folks who might have concerns, but they're not being public right now. We can't really see exactly what impact Musk is having because we haven't actually seen the final bill.
Emily, I want to thank you. We'll be talking to you a lot more over the next, well, not just 24 hours, but sounds like the rest of the week, and we'll see whether it continues.
Elon Musk also highlighting a post from billionaire investor Ray Dalio. Dalio wrote on X last night, "There's no way that the deficit and debt bomb problem can be sustainably dealt with unless there is a mix of tax revenue increases and spending decreases that are determined in a bipartisan way. Our representatives in Washington, D.C., both Republicans and Democrats, know that this is true." Dalio goes on to say that today's lawmakers feel that they can't agree to a bipartisan solution of tax revenue increases and spending cuts because their constituents and their parties would throw them out of office. He said, "To me, that's a tragedy." But it is kind of interesting how all the negotiating that's taking place is bipartisanship within a party, right? They're trying to pull one side of the party together. It's not just today. This was the same thing that happened when Obamacare was passed. You have seen over the last 12, 15 years or so, a much bigger swing where there's not a whole lot of bipartisan activity.
Seems to be the case.
It's wrangling the ends of your own party
spectrum. Ends of your own group.
Yeah.
Meantime, talking about Elon Musk, his artificial intelligence company xAI raising a combined $10 billion. That's both in debt and equity. Morgan Stanley is saying that $5 billion was raised through some secured notes and term loans. Another $5 billion coming in from strategic equity investments. In March, you might remember, xAI was valued at $80 billion. Morgan Stanley saying the new debt offering was, quote, oversubscribed and included prominent global debt investors.
Apple shares jumping yesterday on reports that the iPhone maker is considering using outside partners to help power Siri. This could be a big reversal after AI-powered updates to the personal assistant were delayed until 2026. Steve Kovach joins us right now with more on this. This is a huge issue just historically, what it is for Apple to not develop this in-house if that's what's going to happen.
Yeah, and I have a different way of looking at it. Like, yes, you can look at it if they have to go this route, Becky, that maybe you could say they're falling behind and they couldn't do it in-house. That's all true. But also the reason why we saw the stock go up 2% on this news yesterday was that this kind of gives them insurance. If they can't build it in-house, they can still meet their new deadline of 2026 and kind of avoid another embarrassing delay. So what Bloomberg is reporting, that if they can't build out this model, Apple's going to look to third-party partners. Right now, it sounds like Anthropic is the leading contender to power the engine underneath this AI Siri to replace that Apple LLM that they've been working on for a number of years. Now, OpenAI is another option there. And this would also just give Apple a little bit more breathing room to get this out on time. The last thing they need to do right now is miss another deadline. We saw what that did to the stock. Tariffs, of course, hurting the shares this year as well. It also helps Apple do this in a sort of less capital-intensive way. We just learned overnight that XAI is raising $10 billion. And then we also heard yesterday that big investment that Meta is putting in AI, spending $14 billion to bring over the CEO of Scale AI to run that new group. And just all the billions they're spending on CapEx, all the other peers in big tech spending the billions as well. This would just be a sort of discount on all that.
Well, can I ask about this discount issue?
Yeah.
So if, of course, Claude, for example, which is Anthropic's service, is the model, there's going to have to be an enormous investment.
Licensing.
To license it, and not just to license the software, but to actually run it.
Right.
Because the actual processing costs of running every single query and every prompt is a real thing.
Yes.
So when people say it's a discount, I'm sort of always at a little bit of a loss because I don't really understand. You need the same number of data centers, and by the way, you may need even more given
with a billion iPhones out there.
With a billion iPhones out there, and who's going to pick up that cost?
Well, I look at it a different way because look at what Perplexity is doing. Perplexity also builds its app on top of the technology from Anthropic and OpenAI. They're not, yes, they charge you a little bit for it, but they're not spending enormous amounts of money on capital expenditures and so forth as well. So I look at it more like that relationship. You take the technology foundation and put your own little magic on top of it, so to speak. That's what Microsoft's doing that with Copilot. We see it being, and OpenAI models, we see it done with Perplexity. Perhaps Apple thinks it can do it here. And by the way, run it on its own servers. Apple's not going to want to run this thing on a server from Amazon or Google. They're going to want to run it on their own. Exactly.
Well, given
they have their private cloud system.
So the two other related questions.
Right.
One is a privacy question, which is one of the things that Apple's been trying to do quite unsuccessfully is do all this on device. Right. Part of what it's wanted to do the whole time is on device.
Which is impossible right now, by the way. For everything.
And so the question is, how are they going to live up to the quote-unquote promise of on-device style privacy in a cloud world?
Yeah, and that's what they do. That's the private cloud system. They announced this last year, and they did launch it. So, to their credit,
doable?
It's doable. It's happening right now. So when you use Apple Intelligence right now and stuff that's running in the cloud, that is done in a private way. And if you don't believe them, they're actually letting third-party researchers come in and test whether or not that's
true. And then the second piece is, assuming it's Claude and not OpenAI, that seems to me to be a big quandary for a company like an OpenAI for the following reason. Right now, for example, I use ChatGPT a lot.
Yeah.
It has memory. I'm a paid customer. There's a lot of benefits to being in the ecosystem because it's able to pull from all the things that I've been doing. If I start using Claude, I imagine if I'm using Siri, I imagine I won't be using OpenAI.
Right, you'll switch.
There's a binary situation here.
It comes with the ecosystem.
So you're going to have to convert some of those people over. But at the same time, the way I'm interpreting
it. But you do it now, and OpenAI loses its big edge. I mean,
it does, but I don't see this as so much a bolt-on. Like right now, ChatGPT is a bolt-on to the iPhone, right? If you ask Siri a question, it gets confused. It kind of kicks you to ChatGPT. This would be kind of the underlying foundational model, like you see with Perplexity.
Right, but my question is, therefore, what happens to all those
OpenAI users, you mean?
What I'm saying is all the OpenAI users who are on ChatGPT, if they decide for whatever reason, you know what, I like living in the Apple ecosystem, it's easier for me to say, hey, Siri, I shouldn't have done that.
Yeah.
I apologize to everybody who's watching if I just lit up your phone. That's not a good thing.
No, it's not. And by the way, ChatGPT had that huge benefit of working on the iPhone, having that huge exposure. It's not a good product, though. It's not a good integration. So they need something that could be better. By the way, they started with ChatGPT, that integration. They said it's the best one out there. That's why we're starting with it. We'll eventually open it up to more models. They haven't done that yet.
All right, let me ask you both this. How much of an edge does OpenAI have right now? And how cemented is that edge?
Well, it's by far the most used. If you look at the user numbers compared to Claude and OpenAI, I mean, it's not even close.
But how cemented is that, I guess?
Right.
I think at this very moment, and part of it is the memory, it's a better product today because, again,
used it.
There's a network effect. The more you use it, the better it gets.
And that's Apple's proposition, too, by the way, because you have all that on your phone already.
That sort of is the issue.
And then you have Johnny Ive.
Well, we'll see what Johnny Ive does with this other device. I mean, that's the other piece of it.
Which is the stickier ecosystem, I guess, would be my question.
I think this is the stickier ecosystem.
That's what I would say right now. If you ask me that right now.
Right. You're going to ask Siri more than you're going to go in and open the ChatGPT app and do all that. What if it's just right there in Siri? Just push one button and talk to it.
I don't feel like leaving this because of music and photos and everything else.
And again, that's the proposition, because all your stuff is either on your phone or in this private iCloud, and it can kind of tap into that. So and by the way, third-party apps as well.
If you're younger, maybe you're a more open audience.
That's possible as well, but that's
because you haven't built up the fortune.
Yeah, but you still have all your contacts, you still have all your photos. I mean,
here's my only other question. You know, when you've talked to the folks, for example, at Amazon with Alexa, they were always very nervous about using one of these big LLMs. It's not their own, because their view is, if you ask it a question and it turns all the lights off in your house, or if you ask it a question and you ask it to buy you batteries and it sends you the wrong batteries, that's like an actual problem, and that people have come to expect a certain level of excellence, and that anything less than that, a hallucination, something going wrong, is something that would be considered unacceptable given the history of the that
and
people
it's
have
Amazon's fault at
with the product.
And I guarantee you, Apple's hyper aware of that, and so that is part of the reason why this never launched.
And so that's the question. Even when Siri doesn't work, there's time when Siri isn't great. But it's not doing things that are
great.
But there's very few times it's doing something that's like fundamentally wrong.
Or give you the wrong answer. Well, sometimes it does give you the wrong answer. But whereas these do, yes, you're correct. They hallucinate. They're kind of have a sycophantic posture where they try to tell you what you want to know.
Do you think that the public, the Apple public, if you will, would accept more of the kind of answers and whatever challenges those answers pose coming out of a ChatGPT?
It'll be less accepting, I think. I think that the standard is higher on an Apple product.
I'm kind of used to it when I'm using any of these large language models. I'm used to a certain amount of it. I think I might have a little more
to double check it. You mean?
Yeah,
but most
people don't.
People use this thing as their therapist and their best friend, and fall in love with it and stuff like that. I mean, people view these as gods almost, and so you got to you got to take that. I know you shouldn't.
Wrong with us?
Do not use this as your therapist. Use your therapist as your therapist.
Do not use it as your best friend.
Right, exactly. But people do that, and so there is that level of trust, because it's like AI. It's supposed to know everything, but it doesn't. You got to double check it.
I have a little prompt I can help everybody with. That's actually, I did it a couple weeks ago, and it's changed a lot for me. I say, tell it, if you are a paid user in ChatGPT, tell it, remember this.
Oh, I do that, yeah.
No, but all answers must come with a citation and a link.
Okay.
Oh, that's
I like that. I'm going to use that.
If you do that,
you get
for
a lot
any
less
fact,
garbage.
So I do that. I tell it.
It changes a lot of things.
I say directly, search the web for yada, 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 whatever I ask it. I do that, but I like that moving forward. Just do that. That's really good.
And I've done that, and I will tell you
it always does it. It listens to you.
As long as it's looking for facts. If you're asking about facts, it seems to know the difference. You have to say.
That's good.
Yeah.
I usually just direct it, say, give me links on the web. In my query, but that's.
But to do it all the time.
Yeah.
That's good.
Just tell it all the time, and then it starts to do it.
I'm going to do that in the commercial break.
Okay.
Thank you.
Thanks, guys.
Cheese will be next.
Next on Squawk Pod, real estate and real consequences of Mamdani's platform. Real estate developer Scott Rechler weighs in on the Democratic mayoral candidate and whether higher taxes could mean more departures from wealthy New Yorkers.
I'm not leaving the city. Right? I'm here. I think under fringes, you will lose some people that might leave the city, and we've seen that. It's basically our top 1% makes up 40% of our income taxes, so you got to be sensitive
Well, that's what
about
I was saying.
that
It's
equal.
the billionaires you're losing. That's a big problem.
That's a big problem.
Plus, how many of Mamdani's campaign promises can he really deliver? We'll be right back after this break. You're listening to Squawk Pod from CNBC with Becky Quick and Andrew Ross Sorkin.
Joining us right now for a conversation about real estate, local New York City mayoral politics, and so much more, RXR Chairman and CEO Scott Rechler. Good morning to you.
Good morning,
I think we're all
Andrew.
trying to figure out what's going on with the real estate market in New York City, but I think the overhang or overlay to all of this is what's just happened in this mayoral election. And I think a lot of people are surprised about it, and I know a lot of people in your business seem to be anxious about it. So what's your take?
Yeah, I'm not really anxious about it. I was surprised about it, but you got to put it in perspective. And there's really two things. One, Mamdani, he won the primary, right? And he was actually able to appeal to a very passionate, disenfranchised group that came out in big numbers. Now we have a general election, which is going to broaden the amount of people that actually vote in this election. And I think New Yorkers who come here for opportunity, that this is the capital of capitalism, I think they're going to come out and say, I don't want a socialist for mayor. I think New York.
So you think he's going to lose?
I think that when the general election, I think he's going to have a very hard time. We're the city that has more Jews in the world than anywhere else but Israel, and we have a mayoral candidate, who basically has condoned anti-Semitic remarks and is anti-Israel. I don't think New Yorkers
He won
want to vote
almost
that
half a
on.
million votes in the primary. In the last general election, only 1.1 million
And I think this.
You think there's going to be a 2
I
million
think
turnout?
what's going to happen. I think there'll be more passionate people that will come out for this election than they have in the past, because this is very different than what New Yorkers have had before.
Yeah, except
right?
what's so interesting is you had basically white, wealthy voters in New York voting for him. Mm-hmm. So it's a very interesting dynamic.
Yeah, there's no doubt. But I think part of it was the nature of the campaign. We've seen this, by the way, throughout the country, right? And I believe it, right? There's a level of disenfranchisement for a lot of young people. The cost of living has gotten, way over the top here.
Right.
The widening inequalities. These are real issues, right? So I agree with his diagnosis, but I don't agree with his prescribed policies.
Okay, so I actually want to
with
ask you about the prescribed policies for a second, because we were talking about this yesterday, and I've always said that I would love to make this city more affordable. I think everybody wants this city to be more affordable. By the way, there are a lot of cities that need to become more affordable.
Absolutely.
The question is, to your point, how do you get there?
Right.
I think it's building more. I think you just need a lot more buildings, which I assume means a lot more permitting, which means getting a lot of the red tape out of the way, allowing certain buildings that people don't want to go down to go down and go up, the whole thing.
That's right.
What is your prescription, given the business you're in? And how much could that actually change the dynamic?
Yeah, listen, and you're 100% right. The way you deal with the housing shortage is you need to add more supply. And if you look around the country, to places like Austin, Texas, you haven't seen the spike in rent that we have here. We have a 1.5% vacancy rate. You need to build, and you need to build at every level. You need to build for public housing, you need young professional housing, luxury housing, and there's.
Right, but the problem is that most people in your business would prefer right now, to the extent they can build at all, they want to build luxury housing.
Right, but and then
it's a higher margin place.
There's good policies that could be put in place to change that, right? When I was here the last time, we talked about converting old office buildings to residential, right? And I said that could be a 10 to 20 year problem unless public policy comes in and accelerates it. Well, the city of Yes and then the M467 legislation had now created tax incentives, expedited approvals, and what could have been that 10 to 20 year problem is a 5 to 10 year, and what could have been 10,000 to 20,000 units being done is probably going to be 20,000 to 40,000 units of converting office buildings. We're doing it right around.
How many units do we need to genuinely change?
And is it low-income housing?
Again, and this has been every study that's been done. When you build housing, it creates more housing for every level.
So it's not low-income housing?
Yeah, it is. There is. No, it is. Actually encourages 20% is low-income housing.
What's low-income housing? Because
it
in our
depends on the
neighborhood,
AMI.
it's like 800,000.
Right. It depends. Well, these are rentals, right? So it depends on it's a percentage of the income levels. But again, this goes back to your point, Andrew. The Minneapolis Fed put out a study, right? So that said that if you build housing, what happens at every income level, there's more housing. So people, they do
but
well,
from the
they
real
grow the
estate
next
perspective,
level.
you're saying don't worry about low-income housing, just build whatever.
No,
the luxury stuff that
I think you
everybody
should
wants to build, and that should help other
I think
places.
you need to incentivize low-income housing, and I think there's different policies and prescriptions for that, right? There's public housing that you need a different set of policies to incentivize public housing than you do then market rate housing. Market rate housing, you need to encourage to have some level of affordability within that market rate housing, which is what happens.
I think the description of affordability is really important too. Like I said, in my town, when they put in affordable housing, there were $1.1 million units. The affordable ones were $800,000.
Yeah,
so it's not really affordable.
Yeah, I agree. And this is a challenge, right, that New York has, right? And by the way, this is also us being a victim of our success. We're attracting the best and brightest people around the world. They want to be here, right? You talk to every major CEO. This is where they want to be.
So let me push on one thing, and it's probably the single question I've been asked by people around this whole election in the past week. They say, do you really believe that people will leave the city in droves that are high-income earners or not if the taxes go up by 2%? That is a fundamental question. I won't tell you what the answer I've offered, but I'm curious what your answer actually is, given the other view, which I'll posit, which is it's Mamdani's view, which is that people love the city just the way you say they love the city, and they're all coming here anyway. Right. You have 1.5% vacancy.
Right, and I think that again, I'm not leaving the city. Right, I'm here. I think under fringes you will lose some people that might leave the city, and we've seen that. Right, and that if you think about, that it's basically our top 1% makes up 40% of our income taxes. So you got to be sensitive.
Well, that's what
about
I would say.
that
If it's the billionaires you're losing, that's a big problem.
Right, that's a big problem. But I also want to be a really important point that people have not focused on. Let's assume Mamdani does become our next mayor. Right. Right. At the end of the day, he doesn't have the power to do the things he's saying. He can't raise taxes. He can't raise real estate taxes. He can't change our transit system. Can't give away free bus rides. That all has to happen in Albany. The night after the election, I spoke to the governor. She was clear, under her watch, whoever the mayor is, she's not raising taxes. So that's sort of a fear that people have. That's not going to be a reality when we get through this.
We can impact services.
Yes, and listen, at the end of the day, spending money and giving away free things isn't the solution here. I mean, just one real quick point, right? The city council passed the budget last night, $116 billion. When Mike Bloomberg left office, probably the best mayor we've had in modern times, it was $66 billion. So almost twice. Do we have twice as good of services, cleanliness, homelessness issues? No. So we can't just spend money and think that's going to solve the problem. We need good policies that are focused on the issues that ultimately get to the root of the problem.
Scott, I want to thank you for coming in. We wanted to talk about real estate. We're out of time.
Next time.
Before you go, how good, bad, where are we right now?
Great.
Great. Still great.
We're great. I mean, New York is anywhere in the U.S. is the best real estate market. We're back at levels on the office side of seeing things to 2014 levels in terms of leasing volume. Companies are growing. I asked some of the CEOs.
Office vacancies, we had somebody in the other day who said office vacancies are still well above where they were in 2019.
As an average. But when you look at the better buildings, we're in the single digits. And so what you've had, and this has been the phenomenon, this is why there's conversions, there's this flight to quality. If you own good buildings, you have a single-digit vacancy.
But vacancies are still vacancies if you're looking at the average.
If people don't want to rent in an old building because they don't want to bring their teams back to places like that, it's really not competing with the better buildings.
Okay. Scott, thank you for coming in.
Thank you.
Wall Street might not have SpaceX, but a new token that's tied to private shares will. We'll speak to co-CEO of investing platform Republic about how he's giving retail investors access to pre-IPO shares and how he's treading water with the SEC.
If a mother of two in Iowa can mortgage her house and go put it all on black on Vegas, but she can't own pre-IPO SpaceX, that's insane.
That big conversation is coming up on Squawk Pod. Welcome back to Squawk Pod.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Becky Quick. Joe is off today. This morning, the tokenization of investing becoming bigger. Robinhood announced yesterday that it is entering the game, and Coinbase has sought SEC approval for its own. Joining us right now is Andrew Durgee. He is the co-CEO of investing platform Republic. Republic announcing that it has launched a SpaceX token which mirrors the performance of private shares of the company. Good morning to you. This is a watershed potentially in the world of investing. the way the Robinhood deal is set up, you have to be an investor outside of the United States. So you have to be in Europe. For what you're doing, where can you be based?
Here in the U.S.
Okay, so tell me the distinction and how it works.
Yeah. And this is the first time that U.S. retail has an opportunity to have exposure to pre-IPO shares of anything. Now, we started with SpaceX because for us, that's really a watershed moment, and that's a very future-oriented business, and we also see ourselves as a future-oriented business. So we use a unique infrastructure here in the U.S., particularly around a debt instrument that allows U.S. retail to enter that market. And that's a really big differentiator between
so
us.
Just explain the technicals of how you're doing this, how you're mirroring the performance, and then we should probably get into whatever you think the regulatory risks are of what you're doing.
Yeah, so this couldn't be done without tokenization, and that's why that's really at the forefront of not only what we do, also Robinhood in a really similar position. There's two things. There's not only just the exposure to the asset itself, being a retail person touching an asset previously, which was impossible unless you were accredited or you had a certain level of wealth or the minimum investments were incredibly high. Right now you can do this with us for $50, right, which is unbelievable. But the reason that tokenization becomes so prominent is now there's also the ability to have secondary market trading. So previously these assets were very hard to move, but through tokenization now it can be instantaneous.
But here's let's go backwards. I want to go backwards for a second. Okay, so we have rules. The SEC has rules in this country. We can debate whether they're good rules or bad rules, but there are rules that say you have to be effectively an accredited investor to be investing in private businesses, in large part because the disclosures of those private businesses are not at the same level of public ones.
Sure.
That is the sort of conceit of what the rules suggest. One of the big questions about, by the way, the future of SpaceX is the relationship that Elon Musk has with the government and with this administration, given that they are responsible in large part for assigning big contracts and also regulating this business. How much do you worry, as somebody who's now gone all in on SpaceX, about the politics that he's engaged in?
The reality is a lot of these different private companies have these different government contracts, and they rely on, could be subsidies, it could be the relationships, lobbyists. Investing in private companies has a risk to it, but also that's where the greatest upside is, right? So since the 1930s, retail has been kept out of private businesses, right? Now this is the first time where they'll be able to have access to the upside and not simply only be able to participate at the IPO level.
Okay, so here's the question, though, about all of this. And now we're going to go back, because before we started this interview, or before we were so, interrupted by the president, what you're doing, you are ultimately bypassing to some degree the SEC rules that have been put in place around buying private companies for accredited investors. Accredited investors mean you have more than $1 million to do this. You're allowing people to buy into a private company that doesn't have the same disclosure rules as public ones do.
Sure.
For people who can buy it in even small increments. What's the smallest?
$50.
$50, smallest piece you can buy. How are you technically doing this? Meaning, are you buying the underlying stock in a foreign investment trust of some sort, and then mirroring that in a token here? Is that what's really happening, just so we're clear?
And one of the reasons we launched SpaceX first is we already have exposure to SpaceX. So we have that underlying asset. The others that we're launching, and including today and throughout the next couple of weeks, same thing. We either have the underlying asset or we have access to the underlying asset. Right? So ultimately that will sit with us.
And so the question is, why do you believe, this is a regulatory question, ultimately, quote unquote, tokenizing a private asset that otherwise you could not own is not going to be contested?
We fundamentally disagree with the U.S. accreditation system. Right? And particularly me personally, something that is put into place in the 1930s to protect consumers ultimately. Right? But as we look at, the world has changed drastically now. If a mother of two in Iowa can mortgage her house and go put it all on black on Vegas, but she can't own pre-IPO SpaceX, that's insane.
Okay, so we can all have, look, we can have philosophical debates. We can have a philosophical debate about whether the law is a good law or a bad law. That I'm with you about.
Right, but we now have a structure in a way that allows us to facilitate this type of offering completely within the existing U.S. structure to allow this to happen.
Has this been approved by the SEC?
Where
are you with the SEC right now?
Yeah, so we have active conversations with them. We consider them a close partner, and we're going to continue to work with them through this process. But we're not using something new. We're using something that's pre-existing.
Have they told you that this is? Have they given their blessing on this?
No, that's not really how that works. I
Right.
mean, they're evaluating it ultimately.
Right. And so my question is,
Yeah.
what is the risk to somebody who engages with you,
Yeah.
buys a token of SpaceX, and let's say 6 months from now, the SEC comes out with a proclamation that says the tokenization of foreign assets, which is what this effectively is not allowed for investors that are quote unquote not accredited?
Great question. So we have to file what's known as a Form C anyway, so that has to go through its ultimate approval process. We do that as a business. We've done it hundreds, thousands of times. As we get through that is when the distributions happen. And so once that is approved, distributions take place, everything is in the clear. And so we're going through that process now.
But what I'm asking is, if it's not in the clear,
Yeah.
what happens to your money?
Well, we won't take in that cash,
Okay.
the investment, until that is in place.
Are you doing this with the blessing of Elon Musk and SpaceX?
No, we don't have to ask for permission or beg for forgiveness. The structure that we are using doesn't require any approvals from
I just wonder if you do that, though, if other companies down the road are going to say, I don't want you as a private investor so that you have this underlying asset to then resell to other people.
The futures contracts exist outside of us, right? So
No,
if you want
private companies can choose who they want to let in.
Sure. But the reality is we are not doing anything that's out of bounds.
But will you sell tokens on anything that you don't have an underlying asset ownership
No,
stake?
if I don't have either, let me be clear, if I don't either have the underlying asset or direct access to the underlying asset, we wouldn't touch it.
And will you not sell more than, what's the limiting factor on how many tokens you could sell for your underlying
Yeah,
stake?
what we have ultimate allocation to. I mean, we're limited in retail. We use something called Reg CF, which has a $5 million limit for U.S. retail. But there's Reg CF, Reg D, Reg S. These are all these different exemptions that we use in order to facilitate these transactions. But regardless, we can only sell what we have or have access
But can
to.
we just call a spade a spade? Effectively, what you're doing, you agree, I think, that what you're doing is effectively at odds with what the law is intended to do. How about that?
I don't know if I want to say we're at odds. We're using the laws that exist. We're not bypassing anything. We're using a pre-existing structure that has been tried and true.
Right, but you recognize the intention of the SEC law was to prevent the public from, the public with less than $1 million of being an accredited investor, from accessing private company stock, because the view was that they didn't have the same kinds of disclosures and rules that a public did. And that effectively, this is a workaround to that.
I think the reality is when you really titrate it down, ultimately, we very much limit what people's exposure can even be to this, right? The maximum that anyone can do in the SpaceX offering is $5,000, right? So we are giving people an opportunity to participate and a very limited capacity in something that they've been kept out of previously.
What is the fee structure to you?
Yeah, so that there when
for the privilege of accessing this, what I'll call workaround for now.
Yeah.
I pay you what?
So where we really make at the end, where we're going to make our money, is in the secondary trading. So once the asset is trading on our secondary market, because we own the only 24/7, 365 ATS for trading of digital assets. No one else has that for digital securities. Okay. So we'll make a percentage on the trades up and down in that secondary market.
Okay, but what about the fees that I would pay to you?
There's no direct fees from right now in our current offering. Could be changed in the future.
So if I spend $5,000, if I buy $5,000 worth of SpaceX, that's a better deal than Fidelity gives. I mean, I have to pay Fidelity something, right?
Yeah, ultimately, because what you'll have is we're setting it up at whatever the previous round is, whatever just took place. You get to get in at the same point that everyone else just did.
Right. Let me ask you one other just philosophical question.
Yeah.
I know you disagree with the accredited investor conceit.
Sure.
We watched a whole bunch of SPACs go public.
Oh, yeah.
In the last 4 years.
Yeah.
And they're coming back right now. But there was a period of time where people were all in on SPACs, and the argument was you got to give people access to stuff early. It's part of the American dream.
Yeah.
If you ever want people to be able to catch up and experience that dream, you have to let them into this kind of format of an opportunity. And the truth is that most of them did not perform.
Yeah.
And actually performed quite badly. And there were a lot of promoters out there promoting lots of things that did not come true whatsoever.
Yep.
And that was always the argument against allowing retail investors that didn't have enough money effectively to lose to play that game.
Yeah.
What do you think of that?
Yeah, one of the areas I think SPACs really went wrong is the forward-looking statements, right? Ultimately, what you saw was these crazy projections that they were allowed to put out,
right,
ultimately, that became a trap for retail investors, right?
But isn't that the same trap, some people would argue, for private companies? Because they can put out those forward projections too, by the way.
They certainly.
So what's the difference?
Yeah, I mean, they certainly can. But I think when you looked at the SPAC structure, because it was these public market environments, people had a lot of confidence in it. And that because they went into it with that level of confidence, because there's like, I'm protected, this is public market, wasn't reality, right? They fell into that forward-looking statement. These are private markets. There's inherent risk in private markets, undoubtedly. But ultimately, how you look at private markets versus public markets is different. It's not the same.
And you think that the general public, if you will, look, there's some people say, by us even talking about it this way, they say you're protecting the man, Andrew. Like, you should give us the opportunity to do this. We want these opportunities on one end.
Sure.
But then when things go wrong, they say, where was the regulator to prevent this from happening?
Yeah.
Right?
Yeah. These are all real concerns in any form of investing. It doesn't matter if it's in private or public markets, right? And people should spend time in research and understanding. But simply because they don't have a certain amount of money, they shouldn't be punished. That's what we're talking about here. You're punishing people just because they don't have a certain amount of wealth. It's just grossly inappropriate.
What's to prevent somebody from going and just being in an ETF that tracks some of those other companies along those lines?
I think that's certainly possible. I think you will see that probably at some point. I think you'll see these different assets basketed. Private markets have grown faster than public markets. Like private markets are parabolic right now.
Yeah, we talked yesterday on the program about how private companies stay private for far longer.
Yeah, or public companies go back private.
Right.
Yeah. So only recently has the IPO market really started to turn on. Right. For like a decade, basically retail was just punished, right? Because there was no IPOs, there was no public activity, right? And all the wealth was starting to accrue specifically at the private level, right? Fortunately, the IPO markets have turned on now to some degree, and you're starting to see more activity. But it's at this point, to continue to create a financial barrier or a gating item is really problematic.
Okay, I'm going to get killed because they want us to go.
Oh, no problem.
No, here's one last thing.
Yeah.
One of the big issues right now in private equity and venture capital land, we talked about it with a guest yesterday, is the idea that actually nobody's going public, to Becky's point, and that things are locked up. There's all this money locked up. And in a way, you could argue that what you're doing is helping keep the lockup longer.
Mm-hmm.
But maybe it's keeping the lockup longer, but now with a secondary market, people can participate, right? They're not kept out of it.
Through this version of it, yes. But it prevents the sort of ultimate go public. And maybe there's a larger debate about that.
And maybe there's a different variety of
That's
going
why I'm
public.
trying to figure out what the companies think of you, what a SpaceX thinks of you, what any of these other private companies. Do they like it because it's a way for kind of tracking what's happening?
It's a mix, honestly. I think there's going to be people that like it. There's going to be people that collaborate with us. Listen, we're launching, and we have another huge launch today. We're launching, I'm saying it here for the first time, we're launching Anthropic. We're super excited about it. We love that AI business. What they've done with Claude is amazing. And now you're going to have retail be able to participate in Anthropic.
Are you now a competitor with the NASDAQ and the NYC, where if people want to get access to these, they have to come through you, and you are the market?
For private markets, yeah.
Right. And just finally, it's owned where? Physically?
Where?
The shares in these companies are owned where?
When we have the underlying asset, they sit with us.
I understand that. What country?
In the U.S.
In the U.S. So you own those shares in the United States. It's not foreign owned, which is the way Robinhood's set up. No,
they're a EU exclusive,
right?
And they had an incredible launch actually yesterday in EU. We are U.S. exclusive. Well, not U.S. exclusive, but we are U.S. focused. We are U.S. centric. But anyone globally can participate.
And that can be audited.
What's that?
Your holdings?
They could, yeah. At any point, they could come and check for any of our offerings. When the offerings are launched, they could come and audit our underlying assets. Totally
who could come and audit? Do you have an auditor that provides that? Just verification?
We will. We don't now. We don't have it yet because we haven't gone through that process.
But you'll have one of the big companies that.
Yeah, we'll use one of the big four inevitably to do it.
Have you talked to any of them about doing that?
We have relationships with the big four. We have an asset management division in the company.
Okay. More to come. Come on back.
Yeah, anytime.
I think this is a fascinating, larger issue. We look forward to your progress.
Thank you.
That does it for Squawk Pod today. Thank you for listening as always. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC starting at 6 a.m. Eastern and going all the way until 9 to get the smartest takes from that 3-hour TV show right into your ears. Follow Squawk Pod wherever you get your podcasts. If you already follow Squawk Pod, you might notice that in your podcast feed, we have a new thing we're trying. It's called 5 Things Before the Opening Bell, a 2-ish minute roundup of the headlines that we're watching at CNBC. It's out 3 times a week, so click that follow button to hear all of our podcast content. While you do that, we'll get ready for our next show. See you right back here tomorrow.
We are clear. Thanks, guys.